Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 31st of May. All right, now the US debt ceiling jitters, okay, continuing to disrupt the markets. You know, you got, and it's being attributed to a lot of things, right? Oil slides 4% on worries about US debt ceiling. OPEC talks, you know, what the Fed are going to do afterwards. There's a lot of conjecture around what's going to happen here, there, and whatever, right? But the first thing we need to get through is this debt ceiling. It is creating a little bit of uncertainty, to say the least. Now, if we have a look at the different markets, now, this is the first day of the week in North America, okay, Memorial Day in the US. So equity markets, well, a little bit mixed, okay? At the moment, even the equity futures aren't really sure what they're doing. The currencies, well, we had a bit of a correction. And I was talking about this yesterday with regards the great setup on Euro and the dollar index. A lot of these things, they're set up technically for a move, but we don't have the long-standing direction that we need to get a bigger trade on. But just having a look at the global markets, equity markets, once again, just, well, not necessarily discombobulating. NVIDIA's 3% rise has once again stoked the NASDAQ. The NASDAQ is just, tech is, we're all hearing about it, right? AI, this, that, and the other. I tell you what, it's going to come back to bite us at some stage, but right now it's pushing the NASDAQ to new levels, and that's what people are rushing into. The S&P and the Dow Jones, well, they're just sort of churning. You're seeing a little bit of pressure on oil. Gold, well, it's hanging in there. I'm actually surprised, if anything, gold hasn't started going up significantly higher. It hasn't yet. The dollar index, well, it's hanging in there on this chart, and Euro's just tweaked above this level. But you'll see when I switch to the currency charts, right, what's going on here. Okay, you've got these trend lines. And as I said, we don't have the long-standing news, the answers to tell us if Euro goes up or down, or the dollar, right? So the dollar index on a short-term support line just broke through that. That tweaked Euro's break. Sterling had the best performing sort of move, and dollar yen also. The BOJ have come to town saying, you know, they're going to intervene if yen continues to appreciate or depreciate. I mean, who knows what the BOJ are up to, but the don't get too concerned just yet. The BOJ, they don't have a lot of bullets to use, so we'll see how they play out. But if the markets don't do what they're saying, they're building up a bit of a problem. Now, dollar Swiss, okay, I'll come back and show you the data, right? The Swiss COF indicator was exceptionally weak, right? That sort of attributes a big move there on dollar Swiss. We've got, well, oil is falling. It now falls in line with what's happening on dollar CAD, which is going up. Okay, and Aussie and Kiwi, the Antipodeans, are languishing at the moment, whilst their cousins, the European cousins here, Euro and Sterling, have had a nice little reprieve to the top side. If anything, what we're seeing is a clean out of stale positions, right? No big moves, just a clean out of stale positions. Now, just looking at the data from yesterday, the Swift COF indicator, now this doesn't come out that frequently, and it was massively weaker than expected, right? So that is of concern. EU money growth, well, it's weak, but you know what? Doesn't mean too much. Industrial sentiment out of the EU zone, minus 5.2%. Economic sentiment, okay, 96.5, below the low. Now, you look at those, you'd think Euro would be 100 points lower, right? Well, it's not. It's just gone up through a resistance line. So this is what I'm saying. This US debt ceiling is creating uncertainty around what's going on. Now, the dollar has fallen. The numbers here were better than forecast, though, right? Which would lead to usually a higher dollar, but we didn't see that. So we're seeing weak Euro numbers and Euro go up. We're seeing weak, stronger US numbers and it go down, right? The key point is here that consumer confidence, it's at 6-month lows, okay? The range here of that data was pretty wide. So anyway, this takes the pressure off what the Fed may be doing, but we're not seeing that on the equity markets, right? The equity markets should be higher. So we've got a situation, once again, and I don't want to sort of keep harping on about it, but this, the US debt ceiling, it's just a massive head kick that is screwing up the natural flow of the markets, right? So like looking at today's data, there are things coming out. Does it impact? Well, maybe, but I can't really tell you confidently if a weak number goes down or a strong number goes up. Okay. What you need to be sort of looking at is actually the data itself and going, you know what? What's happening on the US equity futures? Because if we know this goes up or down, what happens usually on a risk on, risk off sentiment in the majors? If you start to see some correlation there, well, trading conditions might be okay and you can look for a nice, easy trade. But at the moment, we are still in this holding pattern, right? You got some data here coming out of Japan. Now, is that important? Not really, okay? I'd be having a bit of a look here at the NBNZ Business Outlook number, right? That's something that has shaken the market before, but it has been consistently weak. Kiwi's on its knees at the moment. A really strong number going to bring it back? Probably not. So once again, what I'm trying to get to is we're at a state where we need to be calm and patient, wait for these things to roll out. We've got a lot of things coming out. Of course, Canadian GDP, we've got non-farm payrolls Friday, but unfortunately, we also have the calamity, which is the US government, right? And this US debt ceiling, it's a massive political play. So you can expect it. I still expect the deadline to roll over and they do a deal about 2 weeks afterwards, right? Which is not good for us because it's going to keep the markets in limbo. Anyway, most importantly, keep your technicals up to spec, get your charts, get your trend lines in play. All you can do is look at the markets. I would be very, it's hazardous to sort of trade in these environments where you don't have clear direction and clear sentiment, right? That's the key to this. You want to put your cash into good trading opportunities. I'll tell you what, losing cash in a situation where there's no sort of uniformity, say, across the majors with what the US dollar is doing, or the equity markets aren't exactly doing something uniformly, you're really starting to get into that gambling phrase as opposed to trading, which is more analytical. Anyway, but it's a bit of a wait. Just take your time and we'll see how this plays out. All the best. Cheerio.